Today's guest is Kevin Kennedy, Executive Vice President of North American Markets at Nasdaq, where he leads the team overseeing U.S. equities, options, marketing, sales, communications, and economic research. Kevin recently spoke at the North American Blockchain Summit in Dallas, and we're excited to get his perspective on how the world's leading tech exchange is not just viewing, but implementing blockchain technology and digital assets as part of its long-term strategy. Kevin, welcome to the show.
Thanks, Eleanor. Great to be here. Great to meet you last month. And I think I can bring an interesting perspective. I watched a few of your podcasts. They're great. But I think what I'm going to give you is a whole different perspective than what you've seen so far. So hopefully that's good for your audience.
We love it.
Yeah, no, we're super excited to have that different perspective. We have a lot of founders on, a lot of lawmakers, and people who are sort of crypto natives. So we're looking forward to having sort of the TradFi aspect of your take here. So we will ask you, though, because we always ask our guests this, no matter who they are when they come on the podcast, what does crypto in America mean to you? I know it's the name of the podcast, but what does the sentiment mean to you?
Yeah, the sentiment actually is really important to me. I think it really means three things for me. It means opportunity, it means independence, and lastly, and you're going to hear this from me today, I think it means credibility. So when I think about crypto being in America and expanding, it's great opportunity, one, for Nasdaq, great opportunity for the equities markets, and then obviously great opportunity for all you've heard from all of your guests. And then I think about, actually being down in Texas last month, like the independent part of it, like people just want independence. They want financial independence. They want to make choice, investor choice. They don't need to be over-regulated. We'll talk a little bit about this later. I think you need smart regulation. But then lastly, I think if we all do it right and we all add our part, we're going to gain a lot of credibility, right? So when I think about it, it's everybody does their part. Coinbase does their part. We do our part. All the other stakeholders, I think, will bring a lot of credibility to this asset class.
Mm-hmm. Yeah, I think also I want to kind of take a step back and talk about Kevin Kennedy, right? To Eleanor's point, we haven't gotten guests on like you in the role that you have, and you manage a team of people over at NASDAQ and have been in the role for nearly 2 decades, which is impressive to say the least. But what does a day in the life look like for you?
Okay, well, thanks, Jackie. So it's the one thing I'll be an expert on today out of all the things
Perfect.
we're going to talk about. And I'm going to grow. And like I told you, Eleanor, a few weeks ago, we'll get there as far as expertise over time. But did start in 1987. So when you think TradFi, you can think of people like me. And I started as an options trader out of college in Philadelphia, LaSalle University. And it's really fortuitous, but I think it's really helped me. I actually started trading options on my own with some backers prior to the 1987 crash. And having been there on the floor and losing and then making and losing and making real capital during an event like that really does help you build a foundation of all the market structure change we're going to see. And I've seen over my 38 years in this business. So started as an options trader, eventually evolved that. I'm very entrepreneurial the way I think. So then I started getting more capital, grew that to about 20 people within my firm, and eventually folded that into the Goldman Sachs SLK Whole Derivatives Group. Worked for them for a few years, incredible place to work, learned a ton there as well. And then that was till about 2005, 2006. And then I decided I had been involved in governance at the Philadelphia Stock Exchange as an independent member of the board. And I took that expertise and said, you know what, I want to be on the other side of things. I want to be on the sort of the operational side. So I left trading and joined the Philadelphia Stock Exchange. I left the board. Philadelphia Stock Exchange was then acquired by Nasdaq in 2007. We settled in 2008. So I've been with Nasdaq since right around that 2008 turn of the year there. So I'm in my 17th, 18th year at Nasdaq. And within Nasdaq, I started sort of in operations, just giving oversight into the market operations of options, because that's what Nasdaq needed me for then. And then eventually grew, and now I became responsible for equities and options. And now all those nice things you mentioned in the preamble, Eleanor, economic research, sales, connectivity sometimes falls under me. And now I'm trying to get into add scope of digital assets. So we have a lot of experts at Nasdaq doing this, but our CEO has asked me to take a leadership role in digital assets. So that's what you get here.
I love that. Well, you mentioned that you've really had a front row seat into sort of the inner workings of the markets, right? For the last 25 years, equities and derivatives and pretty much everything else. And curious to know, with sort of I feel like everybody talks about blockchain as this killer app, right? Digital assets are really going to come in and change the narrative. And I'm curious if you see it that way. I mean, you've seen a lot of change events over the last, 25 years in your career, a lot of crashes, a lot of rebounds. Would you call this a true inflection point here with what we're seeing with blockchain technology and what it's doing to the capital markets?
Absolutely. Definitely an inflection point. This is the moment. I mean, we've seen this just prior to the crypto winter. People started to get interested. And then when the crypto winter happened, it was like, oh, see, I told you. And I loved what Emily said from Coinbase, that, it was an opportunity to build what she heard from Brian Armstrong. I thought that was really important because I love thinking like that, having been in the markets for so long, like recessions and things like that are when you take advantage and build. So I thought that was really a great comment. But I do think, so we've been through a lot. We meaning the crypto digital asset evolution. And this is clearly the moment that we're going to take it to another level. And I do think this is why Nasdaq's investing in it. We've been in it for a long time on the surveillance side, but now we're just ramping it up even more and trying to really bridge that gap between U.S. equities and the digital assets class.
Yeah, Kevin, I want to dig into that because I think it has been a long time coming, and we have seen a lot of sort of momentum shifts as cycles come and go, but we haven't seen the amount of rule change or like institutional adoption at this kind of speed, right? And so we're talking to you at a great time. Obviously, GLS, the generic listing standards, were introduced a few months ago. Nasdaq, I think in particular, has just been inundated by these filing requests for ETFs. I think we're going to dive into that more. But how does the ability to work with regulators proactively and not be sort of trying to shove these vehicles into the existing structures, the existing framework, like how does that affect your business?
It really has, Gerald, thanks for the question. It has a strong impact in not just my equities business, but as we're doing this now with our tokenization filing. And look, at Nasdaq, we've been in this business for a long time. We need to get along with our regulators, and we generally do. And even the ones we really like because they're bringing smart regulation and transparency, and they're telegraphing what they want to do, which this administration is doing, is very, very welcome. And whether they do that or they don't, our relationship with regulators really is, we're going to agree to disagree. We're not always going to agree on everything, but I think it really, really helps that now that this administration is very, like I said, telegraphic in what they want to do. They're telling us what they want to do. We'll get into this, I think, a little bit later, but if we talk about the order protection role in U.S. equities, there's aspects of it that we like, that don't like, but we're able to have that dialogue with this administration that you haven't been able to have in maybe a few decades, if ever. So we really welcome the clarity of to be able to have a conversation and discussion. And like I said, we may find things to disagree on, but in general, it's always better to have an open dialogue and be transparent. And that's what this administration brings. So we welcome that.
Yeah, Kevin, you brought up tokenization. I want to talk about that more with you. Nasdaq has really kind of grabbed the bulls by the horns, so to speak, this year when it comes to crypto, most notably with the proposed enablement of trading of tokenized stocks and ETFs. Do you kind of see tokenization as a complement to the existing markets, or do you kind of think all of this will end up on chain eventually?
Great question, Jackie. I think definitely a complement now. And I think, you have to take the first step before you can take the second and third and fourth step. So I think once we get to tokenization, one of the questions we get now is, okay, so settlements T+0? Well, not so fast. Like settlement T+0 would be great, be a real-time settlement, but let's get tokenization done. Let's learn. One of the things I like about the markets is the fastest way to learn is to make a trade. People say, well, how do you get involved in crypto? Well, make a trade. You'll learn very, very quickly when you start losing money or making money. But it's the same thing with regulation. Let's get tokenized securities approved. Let's see the impact. Let's talk to our corporate issuers. Let's talk to the regulators. Let's talk to all stakeholders. And then we'll learn. And we're going to get there. We're going to get to faster settlement times, better margin, portability. All those things are going to come with it. Like, again, going back to the earlier question, this is the inflection point where, but you need to crawl before you walk. And I think the tokenization is like somewhere between crawling and walking. It's a really good first step for the U.S. equities markets.
Mm-hmm. And then we start running later.
Yeah, exactly.
Crawling, walking, running. As you have these conversations with like TradFi companies about the possibility of tokenizing their stocks, how are they responding to it? They
largely just want to be educated. It's funny. There's not really resistance. I think that they trust us. It's one of the things we really invest in with our clients here, our corporate issuer clients, is we meet with them constantly, whether they're listed on Nasdaq or they're about to be listed on Nasdaq, because sometimes we get a little bit of that too, companies that want to be listed on Nasdaq. And honestly, no one's been like, oh, you really shouldn't do that. It's more about educate us, and then we educate them, and they read the news, they watch the markets, they see it. And I'd say in general, it's been very accepting.
That's interesting. Yeah. I feel like tokenization, maybe compared to stable coins might sound a little bit more scary. So it's interesting to hear that there might not be maybe some resistance. It's maybe more just like curiosity, and they're more curious to learn, as opposed to being outright like, no, don't tokenize my stock. I like my
Right.
stock.
I mean, it really does,
is.
Eleanor, come back to trust, because
Yeah.
they're busy running their companies. These are big, and there are $7 trillion companies on Nasdaq. I think 7 of the 8 in the world are on Nasdaq. So they have other work to do. And for us,
Right.
It's like, we just want to trust you. They trust us in 24-hour trading. They trust us where we're going there. They trust us in the order protection rule. They trust us to manage the markets. And they trust us because we spend time with them, and we like to lead with integrity and transparency.
Kevin, can I ask just a quick follow-up on that? In terms of trust, one of the things that I think traditional equity issuers are worried about is this notion of like secondary markets and DeFi as it relates to like transfer restrictions, that kind of stuff. Are you guys having conversations around dealing with that at the Nasdaq, or how is that going to impact sort of this trust relationship that you're talking about?
Yeah, so Gerald, I think about it a lot. And if I understand the question right, you're talking about the fact that you can emulate a stock, but you don't really get the same rights.
Right. Yeah. If I have a token that says it's a share of Apple, or say private secondary or something, then once it's a token, I really have very little control over where it goes, versus working with a transfer agent, or, don't want to get too deep in the weeds, too quick on that. But yeah.
I relate it sometimes when we have conversations here at Nasdaq to really just think about our U.S. options, our listed options market, right? You buy an in-the-money call on a listed security. You don't really own the security. You have the right to buy that security, but you don't own it. The world didn't break. I think liquidity is good, right? I think transparency and education about whether you have a tokenized, what I'll call emulation of a security, but you don't get dividends and you don't have the same rights, as long as you understand that, and that's clear, and that the brokers and the issuers tell you that, I think it's fine. But I don't think the corporate issuers at this point are spending a ton of time worried about that. There are going to be derivative type products, but I think that's another reason that we want to create, really build on our pool of liquidity, and make sure that for closing crosses, for reconstitution of indexes, that the main liquidity is on exchanges. And quite frankly, the largest pool of liquidity is the Nasdaq stock market with the 7 largest companies. So I think that we're going to, I think as long as you have that liquidity and you've invested, that they'll be okay with that. I don't think they're overly concerned. It may change, but I don't think so as of right now.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
I think we're going to get into IPOs and perhaps the notion of raising capital on chain in a little bit, Kevin. But I'm curious, just since we're on the topic of tokenizing right now, how do you see companies like Nasdaq and others, your competitors, having to evolve if companies start raising more capital on chain as opposed to here in the traditional markets?
Yeah, a good question. I mean, it's something we're going to pay a lot of attention to. I won't say it won't happen, but we'll have to look at ways to react. I mean, we are really so close to the market, so close to our clients, and honestly, we're very sensitive to what our competitors are doing. Some of these things, I think we'll be able to adapt. We're going into this with a very open mind that we need to play offense. Nasdaq is not looking at this inflection point as we better protect this, we better protect that. We want to compete and we want to play in this world with digital assets. So you'll see interesting things like us with partnerships. You'll see perhaps acquisitions, small ones. I'm not talking about I'm just saying from where I sit in the markets, there are a lot of digital asset companies that I can partner with to get things done. And I think we've always had the ability to adapt. We were the original disruptor, honestly, in the equities markets. And so we have a sensitivity to those who know how to disrupt, but we have great leadership here. We have a great team, and I think we'll be just fine. But the world will evolve, and we'll be right with it. I'm playing offense too.
Yeah, I'm curious. I want to jump back to sort of the activity of on-chain sort of companies getting into traditional financial markets, largely via wrappers. And of course, the number one wrapper so far has been the ETF, the ETP. We saw with the adoption of generic listing, now we have Solana spot ETFs. We saw Hedera, Litecoin. And some of those criteria, I think you guys are probably pretty interested in. Of course, there's the substantial float element. There's kind of this US futures. And I think people are now just calling it like the Coinbase futures sort of rule so far in terms of what's listed. But how do you see, obviously folks like 21 Shares and Canary and others have a lot of different asset, ETFs filed. And so people are very interested in that. How do you see that changing as you guys continue to have more of these products launched and seek some of that liquidity in the traditional markets that you were talking about?
So, Gerald, I am going to answer your question. I'm going back to what I told Eleanor when I was in Texas. Not an expert here. I have people that work for me. Zhang Bui runs our ETP listings, and she's so excited about today. We have Litecoin and HBAR. But I think a proper answer for you is that we expect that to evolve. Like, first of all, it's great that we have these generic listing standards for spot crypto, like commodity ETFs. I'm probably not phrasing it correctly, but it's another inflection point, like really helpful that we don't have to go through that lengthy process and things get hung up. So super excited about Litecoin and HBAR trading today on Nasdaq. But I think the short answer is it will change, and listing standards are always evolving, and we have to make sure we do what's right for the markets. But I think we're off to a good start, and I think we're super excited by it.
Yeah. And you guys also have the partnership with Hashdex too, right? You have the NCIQ index fund, which has Bitcoin, Ethereum, Solana, XRP, and I believe Stellar. So, you guys are kind of hopping in the game yourself. It's not just you're listing these ETFs, but you also are an issuer yourselves, which is pretty cool.
Exactly, Eleanor. And honestly, we're also, we talk about this a lot, but we filed for Bitcoin index options to complement our Nasdaq 100 options program. We have an unbelievable NDX, what we call the Nasdaq 100, obviously, and we have index options on them where we've grown substantially in the last 3 to 4 years. We're now averaging over 110,000 contracts a day, which 2 years ago was in the 40s. So a lot of growth, and we expect that same thing to happen with Bitcoin index options at Nasdaq.
That's awesome. I want to do a quick flip here. I was at the SEC a CFTC roundtable a couple of weeks ago, and I had the pleasure of sitting front row watching your CEO, Adina Freeman, speak. And I don't know, I'm just so curious. I've never met her in person, but she seems like, just a powerhouse and a really cool person to work for. I mean, you've worked with her now for, almost 18 years. What's that like, kind of working with her day to day and especially when it comes to digital assets, right? I mean, she seemed like she was all in and she was super excited about this technology.
She is the most dynamic leader. And I've had some great leaders and bosses that I've worked with in my career at Goldman and elsewhere. And honestly, so incredible. And, she's early and she's right. Like the cloud, we were the first markets to take a market to the cloud. We took our options markets to the cloud. And when it was like 6, 7, 8 years ago, it was pre-COVID, we started talking about it. We're like, what are you doing? And she just knew. She is a true visionary and walks the walk. Like, we're in a meeting and she carries the meeting, but she'll let people talk. She's just, it is an incredible learning experience for me. Even though I've known her for 18 years, just to work with her. And we're really fortunate to have that kind of leadership.
I also want to talk to you about another big name in the space, SEC Chair Paul Atkins. He's been talking about wanting to make going public cool again because, there's half as many public companies today as there were 30 years ago. Not as many people are IPOing is kind of what they're talking about. Do you kind of see that trend changing now, especially as more crypto and AI firms come to market?
Yeah, thanks, Jackie. I think, with Atkins, and I don't know if it was me or you, I faded out a tiny bit, so I'll try to answer the question, but ask me a follow-up if I don't get it quite right. I think there's momentum with the energy of an Atkins, like just bringing this transparency and talking about, just really inspiring innovation and by making changes and allowing the world to have smart regulation as opposed to too little regulation or too much regulation. I think they're trying to really find that right nuance. And I think what happens is you get excited about the markets. I haven't seen this, right? This excitement, your podcast, yes, in your world, you guys have been living this for a long time. But just to see all the bandwagon jumpers, and I'm not going to consider Nasdaq one of those because we've been in this space in surveillance in Stockholm where the regulator has allowed us, we've been in. So we're also very excited about and competition doesn't scare us. We want to compete. And we have some of the greatest listed companies like a Coinbase, and we're going to compete with them in some respect. But it's great. We're growing the global financial ecosystem. And that is a win-win-win for all of us. And I think Atkins is a big part of that. And I would say, his leadership is bringing momentum and excitement.
I mean, how would you kind of define a healthy IPO market then? I also love what you said about the competition because I also think competition breeds innovation and people shouldn't shy away from it. And I love that NASDAQ is going that route, right?
Yeah, good. With IPOs, a healthy IPO market, it starts with the economy. I'll give you my version, being the guy that runs the markets as opposed to, I'm not really involved in the IPO process as much. But if the economy's strong, and there's every evidence, right, that the economy's strong because we're seeing no, you need to lower interest rates. And it's funny because you want to lower interest rates when the economy's weak, but we're not really weak. So this is where the conundrum comes. So I think we have a perfect storm of fairly decent interest rates, whether they continue to drop a quarter point here or there. We're not looking into QE4. We're not. And that's a reflection. And I think you can just sense the pent up demand that's coming out. We're starting to see it now. And the IPOs that do come out, so much excitement, right? Oversubscribed, doing well. So I'm not sure I answered your question exactly, Jackie, but I see it as, again, being driven really by regulatory clarity. I think it's great.
So, Kevin, I want to follow up on that. I don't want to get you in trouble or put you on the spot, but okay. you have mentioned Coinbase twice now. So you have, as the lawyers say, opened the door to asking you about Coinbase. So the competition element you mentioned, so they recently acquired Echo, which is kind of a private sort of capital allocation, like an SPV sort of platform. They've got the exchange, and even Chair Atkins has talked about sort of super apps. So there's some speculation that Coinbase is kind of building an end-to-end sort of capital formation, sort of ICO, and then even have a listing and launch derivatives and options on this sort of all this captive platform. How does that impact the way you guys are thinking at NASDAQ? Do you see liquidity going into a platform like that or staying in a platform like that? Or, is it just a small part of the market for now to you guys?
I know you did say I brought up Coinbase, so I shouldn't have complimented Emily. I'm teasing. But the truth is, we kind of we're worried about our own house in order, honestly. Yes, we see these things occurring, but we really drive three things home here at NASDAQ all the time, almost every meeting. It's about liquidity, integrity, and transparency. And as we work so closely with our clients, literally on an hourly basis for our liquidity. As long as we can deliver what we've been delivering since our inception, that it's all about liquidity for us. We have so much liquidity here. We have a great market open, a great market close. During the day, our market share, on what trades on exchange is super strong. The NASDAQ Classic Stock Market is the largest pool of liquidity. These other things, again, I look at them, Gerald, like options. I'm not threatened by the U.S. options market where we're number one in equity options by 4.5 points. I'm not threatened by other products. If you want to grow the overall ecosystem, we will all win to that, assuming it has integrity and transparency and liquidity. I don't want these products coming in if they don't have liquidity. And if they try to emulate something and it's not liquid, they're better off just taking it down so that investors aren't harmed.
Outside of tokenization, ETFs, equities, what else is NASDAQ doing in the digital asset space? What kind of piques your interest right now?
I will tell you, the most important thing for me is extended hours. So if you think about that, and we didn't touch on this yet, but we're open for 16 hours a day today. And for years, no one kind of really noticed. You notice on earnings day, after 4 o'clock, you'll see something trade till about 5, and then a little bit in the morning, but that's changed. Again, another inflection point, and we need to be open 24. So the first step, and we announced this a while back, is that we want to get to 23.5, 23.6, depending on what days you want to count. But Sunday evening until Friday afternoon. And then once we get to that 23.6, I think we'll get to 24/7 pretty quickly, because if you really want to compete in that digital asset space, you need to be open 24/7. But again, it goes back to sort of, I won't even say crawling. This is like jogging before we run, right? So we want to start jogging. We've been walking for quite some time at 20 hours a day. We are, again, but think about 23.5, 23.6. We want to bring those three concepts that I always talk about: liquidity, integrity, and transparency. Today, there's markets, and they're all, like, many of them are Nasdaq listed companies because we drive the market. But now we want to be there with the right guardrails, the right investor protections, the right transparency. And I think about the Securities Information Processor, what people call SIP, SIP. And that is like the tape. That's the transparency of the tape. We want to bring that to 24/7. We want to bring the trade report facility. So when something trades off exchange, which 52% of the volume this quarter is trading off exchange in our just normal trading hours. That's a big part of the market, but you need to tell people what's trading there. So we're working with FINRA to build out the TRF, and then our own hours. So I think it's a really key part of digital. It's the foundational layer to get to this next step. You can't get to 24. You can't really compete in digital till you have 24/7. You can't get there till you have 23/6. And we spend a terrific amount of time on it.
When do you anticipate that becoming a thing? 24/5 at least. Is it the second half of 26, would you say?
I think we're targeting like mid-year, and I'll leave it at that. But when we target mid-year, that means getting our test facility up, because we can extend our hours, but we want to make sure all those things I just talked about. How close are we with getting the TRF up? How close are we with the Securities Information Processor? Internally, we expect to be ready by mid-year. And then it's a question of working with the industry on testing dates and things like that. But I would say, sometime later next year, we definitely should see our markets up and live overnight. And then we'll decide whether or not that needs to be in 4,000 stocks or that needs to be in the top 20, which is 98% of the trading. And we're going to walk through that. Going back to earlier comments, like you need to do things incrementally and see because the key is liquidity and investor protection for us. We need to have investor protection. The worst thing, so here's a phrase that I love to use under normal circumstances: don't let perfect be the enemy of the good. I think in the case of overnight trading, you kind of want perfect to be the enemy of the good. Like, let's get things as perfect as we can, because the resiliency is so important to us at Nasdaq.
Kevin, you kind of walked me straight into this next question on sort of that aspect of instant settlement, right? So there's, I guess, a debate in some of the markets of whether delayed settlement is kind of a feature or a bug, depending on where you sit, sort of in the order flow stack. We had Vlad Tenev on the show, a few months ago, and he sort of wanted to take away from his comments was that maybe GameStop would have been prevented by instant settlement, and we're very interested in sort of how that would have played out. How do you guys think about whether the complexity and sort of intermediaries in the financial system right now rely on some of those delays in the way they operate, or would benefit from instant settlement? Like how does that, with liquidity being the key factor, as you mentioned, right? How do you think about that?
Yeah, I think about it a lot, Gerald. So here's the way, this is where being in this business since 1987 has helped me. Sometimes there's change that we talk about and people like to just talk around it and procrastinate and like, it's going to take a while. It's going to take a while. I don't think that's the case in this. I think we want to get there. Right? There's no reason to just conceptually not want instant settlement. Like, it just makes sense. Like, you make a transaction, you want to know the result of your transaction. That said, I am hearing like you need to understand netting and understanding what the actual impact, but what I'm hearing and what I'm sensing is that clients and stakeholders aren't using that as an excuse. I think they're using it with credibility and legitimacy. Like, I think people really want to get there. And I do believe once we're up and fully trading, once we have tokenized securities actually trading within the liquid markets, that you're going to get there way sooner than earlier. I don't know the timeline, but I don't think it's an excuse anymore. I think this is the rare case where this industry is not using something like, oh yeah, we'll worry about that later. You got to have a netting problem or you have a margin problem. We're going to get there. And I think it'll probably speed up. Like, I see very little stopping. We want to get there.
Yeah. And I mean, like, something we talk about a lot on this show, obviously, is like the shifting regulatory environment. It's been a major catalyst for TradFi's move into DeFi. And we would love kind of your take on how you kind of see this different administration shaping up financial policy. Do you think it is a small window to get something achieved, or it's like the start of something bigger?
It's funny. I really like that question, Jackie, because, well, first of all, we're all in, right? We see the opportunity, a word I've used a couple of times now, to do it and to just grow the global financial ecosystem. And then I haven't heard this, honestly, where you might assume people will be like, God, if we can just get through the next 2.5 years, it'll all go away. Like, I'm not sensing that. And I think no matter what, that we've kind of broken some glass in a good way, broken the ceiling, whatever you want to say, and that you kind of can't stop. It goes back to momentum. Like, I think people appreciate that, like, this is finally, this clarity has enabled us to grow. And look, anybody in the markets, whether you're TradFi or DeFi, it's exciting to think about the markets growing and not just, oh, they're commoditized. It's just a boring market, bid ask, and go do your investment somewhere else. I think it's a great opportunity. I don't see it going away, even if, no matter what changes in the next election or midterms or whatever. I think that the momentum is significant, and I think legitimate stakeholders like Nasdaq are buying in, and I think that's worth a ton.
Kevin, I'm curious. You wrote a Wall Street Journal op-ed in 2023, which I remember reading. It was called "The SEC Tries to Do Too Much Too Fast." And you critiqued the Gensler SEC at the time for overreaching, for its barrage. And I remember everybody was critiquing Gensler for, doing so much when it came to overhauling the markets, right? Market structure reform proposals. We're seeing market structure reform for Clarity, the Clarity Act right now, for digital assets and blockchain. Curious to know, how would you compare that to what we're seeing sort of now from the SEC? They're doing a lot in a short space of time. Kind of how would you compare the two?
Awesome. I love this question because I think a lot about that, right? Because I reflect on like, oh, I wrote that article. Do I still mean that? And you know what? You're darn right. I still mean it. And here's why.
There we go.
So think about what I just said in extended hours trading. Like, I could easily say to our development team, like, just get me to 24/7, please. I need to be there. No, you need to move incrementally. And you can't get to 24/7. I don't want to do it all at once, everything at once. You need to learn. And the same thing goes back to what I said about tokenization. Like, yes, I want real-time settlement, but let's get tokenization done. Yes, there's a lot going on, but you still have to move incrementally. So extended hours, we're moving incrementally. And now let me go to the order protection role, which I had the privilege of participating on about a week before Adina did on the CFTC harmonization. And even there, I said, fine, like order protection, which sounds like, oh, you're a TradFi exchange. Of course you want your order protected. That'll protect you from, you have to bring the order to Nasdaq. We are okay with the order protection rule going away. If you only want to come to Nasdaq, if you think our technology is resilient, if you think we have the liquidity, and if you think we have the right fee structure, then bring us the order. Let us compete. But incrementally, you also need to say, if we do that, then let us compete in the ATS world, the alternative trading system world, in the off-exchange world, which we've not been able to own a broker-dealer in that space. You have to think about every piece. It's like a jigsaw puzzle. So my next editorial will be about a jigsaw puzzle. But all these pieces, and I do think this administration at the SEC is actually going about it in the right way, because we've had those meetings, right? Within 2 weeks, I'm down there, Adina's down there, others on our team. We're constantly, our senior counsel is always, communicating with the SEC almost on a daily basis over little things like the teams. And I still stand by that editorial. Sorry, long-winded, but I feel strongly about it.
No, that was great. And I going on that theme of a jigsaw puzzle, right? You could argue that U.S. capital markets are regulated by anywhere from 2 to 20, and I guess if you go all the states, right, we could say there's a lot of regulators sort of to deal with. We've been focusing on the SEC. Obviously, the other big one out there that you probably have a lot of experience with as derivatives and sort of your options business trading is, of course, the CFTC. We saw Mike Seelig nominated by the administration very recently. And I'm curious, like up to this point, it feels like market structure is putting a lot of authority back with the CFTC. You know, we talked about ETFs relying on some US futures listings and things like that. So commodities are obviously playing a huge role here. I guess if you can comment, what do you think about the nomination? And then also, you know, how do you see your role evolving with the CFTC as digital asset structure kind of continues to evolve?
Thanks, Charles. You know, we don't operate a futures exchange, so we're really not in that space. However, and Eleanor heard this with Adina a little bit, like that harmonization and that communication between the SEC and the CFTC is so important. And this is where we're sort of hung up on our own Bitcoin index options filing. Like that could very well come under the CFTC, but we're regulated largely by the SEC. So I don't know, Michael Selig, well, but our team here, everything I've heard is great. And we just really look forward to harmonization. Like this is where this administration kind of needs to get the ball in the end zone. And I think that I think that clarity is going to help all of us. And it goes back to a common theme we've talked about down in Texas, Eleanor, and here. It's just regulatory clarity. So I welcome the nomination. I think it's great.
I mean, with all the rapid innovation happening in markets and crypto, how do you kind of balance that like pressure to keep up with these new developments, you know, while still protecting investors and keeping in line with what you've been doing in the past? Of course, we got to keep that in mind, right? But it's like a balancing act, right? And I could imagine you have to pick and choose when to like run or crawl or walk, right? To the analogy we've been bringing up throughout this episode. So
I really like that question too. So the way I think about it is the way I think about my own personal day in the life. So at Nasdaq, we work pretty hard, and you know, most people here give it everything they have, you know, 16, 18 hours a day at times. And I felt I was doing that before, and then Adina started to broaden my scope a little bit, and I said, okay, like I still only have those same 16 or 18 hours. I'm really like, you know, you need those 6 hours of sleep, like, so that's really good. But it comes, so how do I solve it? It comes down to priorities. And just the way like my priority list changes. And I think the same thing happens the way I run the markets at Nasdaq and the way Adina oversees our markets. It's like, what are we prioritizing today? And I think what we're prioritizing is, you know, one, our fiduciary responsibility to our shareholders, obviously, and our fiduciary responsibility to all investors. And I think if you think about that, it's like, okay, and where do those two intersect? Where can we play offense, but do it with investor protection? So really, they're the two things that I think of on like my to-do list is like investor protection and then opportunity for shareholders. And I think if those two, if you can kind of like merge those two together as you think about liquidity, integrity, and transparency, it becomes like, okay, let's not have fear of missing out on this particular aspect. Like, let's stay in our lane and let's think about what we can do and bringing, let's say, event contracts. Like, do I need to be in event contracts in, you know, the Chiefs Commanders game last night? No, I don't. But do I want to be in event contracts of binary options in my options business on the Nasdaq 100 or in some single stocks? Yes, I do. So it really just goes, there are the 5 things I'd say we think about, the 3: liquidity, integrity, transparency. And then like on my to-do list, you know, return for shareholders and investor protection.
Yeah, Kevin, I'm curious. We've talked a lot about kind of competition from innovation, right? And there's some sort of I feel like they're just permanent truths in the United States that are being challenged a little bit right now. One of them, you know, if you want to incorporate and go public, you go to Delaware, right? We've seen some of that shift to Texas and then shift back. And, you know, Wyoming is doing some interesting things, obviously a lot of competition there. And on the exchange side, I know back in March of this year, you guys opened a larger, I think it was a regional headquarters in Dallas. And we also have the Texas Stock Exchange coming online and competing for some of that liquidity with a slightly different set of rules. So when you're thinking about those 3 kind of criteria that you guys operate under, how do you evaluate kind of new entrants into the space or like Texas as a market? Like, what does that do for the way you guys think about, you know, your business?
You know, what's funny, Gerald, like I've been on panels for a long time here at Nasdaq. And one of the things people on panels love to say is we welcome competition, right? I heard it in options because I got to see the options industry grow for a long time. And, you know, and you just see these like exchange heads. We're like, we love competition. Okay. No one loves competition, but let's cut to the chase. Competition does make us better. So like Texas is really important to us. That's why I was just down there with Eleanor. Like we love Texas. We have great leadership in Texas. It's now a headquarters for us. We are really close to Texas listed companies. And you know what? Like we're not playing defense. We're playing offense in Texas, and we're bringing investors choice down there, and we welcome it. And we're going to be the best exchange in Texas without question. We have Rachel Raz, who I think Eleanor knows pretty well, was down at the Blockchain Council, and under her leadership, like, bring it on. Like, we love it.
Well, Kevin, to wrap things up, aside from everything we discussed today, what's one other thing that you're watching in DC or elsewhere at NASDAQ that you think others should be paying attention to?
Yeah, I really think the New York Giants football team is something we really we know they have their own struggles. We've talked about a little bit, Eleanor. Look, we're looking at investor protection, honestly. Like what we bring at NASDAQ, and this is what we tell our corporate issuers, we bring leadership, integrity, and our liquidity in no particular order. They're all important. They're important issuers. The world is changing, but we'll be there with you. We're going to do our best. We've been demonstrating it for decades, and we believe, you know, we're as competitive as anyone, and we will bring the right guardrails, the right protection, the right liquidity, and we're excited, and we're playing offense.
Awesome.
Amazing.
Thank you so much, Kevin, for joining us on Crypto in America today. It's been such a pleasure.
All right. It was great to spend time with all
Kevin.
three of you. Thank you.
Thanks, Kevin.